unit and batch costing, both are the methods of costing, Nana, used in the appropriate industries. Unit costing is used in those industries where they produce only single type of product, where they manufacture only one type of product. In such industry, we will use unit costing. And where we will use batch costing, where units are produced in batches or lot. Now, if you are aware of EOQ, what is the full form for EOQ? If you are thorough with that concept, you can do any problem in batch costing. Because in EOQ is from raw material point of view. In batch costing, we'll go through EBQ, economic batch quantity or economic batch size. That will be from output point of view. Okay, so both are easy. When it comes to methods, Nana, up to prime cost, nothing to worry about because that information will be given straight away. The only thing that we need to worry about is overheads. If overhead is variable, per unit will be given, we'll take per unit. If overhead is fixed, we'll take total, Nana. But if it is semi-variable, we have to divide the semi-variable into variable and fixed. That is the only part that we need to take care of. Remaining everything is easy. So some theory part is given. Let us go to the theory part, Nana. Okay. Right, then we'll start the problems. When it comes to unit costing, we have 2 problems. And when it comes to batch costing, we have, I think, 5 problems. Because most probably tomorrow also, if they give us 1.5 hours, we'll complete the chapter. Okay, right, Nana. So let's start with unit costing. Let's start with unit costing, Nana. Who has a student mic? Read it.
Unit costing.
Okay.
This method of costing is followed by industries which produce a single output or few variants of a single output.
Few variants of a single output. That means the output will be same, Nana, but there will be small modification, packing or something else. Okay, right now. So basically, we focus on this single output. Examples are cement industry, steel industry, coal industry. In all these industries, we will be using this method of costing. In steel industry also, they will be producing steel only, but there will be some small variations in terms of thickness or in terms of length and width, Nana. Okay, remaining everything will be one and the same. If it is thinner, it will be called with one separate name, that is called as sheet, Nana. If it is thicker, it will be called as flat, because it cannot be bent manually. Okay, steel is a steel. Depending on the variation in thickness, they will call with different names. Technical speaking, steel industry is also manufacturing a single type of product, steel. But depending on the requirement, it is bringing in small variations in them. That is in terms of thickness, in terms of length or breadth. Okay, right. So in whichever industry we are producing a single type of output, in that industry we will be using unit costing method. Next, Ra.
Unit costing is a method of costing used where the output produced by an entity is identical.
Identical means same. Now, next, Nana. And each
unit of output require identical.
When units produce the same, automatically cost per unit will also be one and the same. When units produce the same, cost per unit will also be one and the same. So how to calculate cost per unit? Total cost of production divided by number of units produced. Simple thing, Nana. Okay. Next.
Cost collection procedure in unit cost.
Okay.
The cost for production of output is collected element-wise and posted in the
element-wise classification of cost. What is element-wise classification of cost? Material, labor, and expenses. That is the first classification of cost. That is element-wise classification of cost. So here costs are collected element-wise and posted in the cost accounting system for cost ascertainment. The element-wise collection is done as below: cost of material, collection of material cost, collection of employee cost or labor cost, collection of overheads. This is the point that we need to be careful now. Because if overheads are variable, no need to worry about, because we will simply take per unit and we will multiply with number of units produced. If it is fixed, Nana, then also no need to worry about, because fixed will remain same up to 100% capacity. When it is semi-variable, only that calculation part we need to do. We know how to segregate variable portion from semi-variable and fixed portion from semi-variable. Okay. Next, treatment of spoiled and defective units. If it is normal, what we will do. If it is abnormal, what we will do. That is given there. We already know what type of treatment should be given in case of normal, in case of abnormal. In case of normal, what will happen on a cost of normal units will be borne by. Let us go through the same thing, Nana. Read it, Ra.
Loss due to normal reasons.
Hmm.
When a normal rate of defectives has already been established and actual number of defectives is within the normal limit, the
Okay.
cost of rectification or loss will be charged to the entire output.
Entire output. Any cost incurred, Nana. See, in cost sheet also we have seen it. Cost incurred for rectification of defective units will be shown as factory overheads. I have given the reasoning also because rectification will be done in factory. When you're treating it as factory overhead, that means you are charging it to the customer or borne by the company. Charging to the same thing is given here also, Nana. If any rectification is incurred, it will be charged to the entire output. That is the reason why. That is the reason why we are treating it as overhead. When you treat it as overhead, Nana, you have to distribute it on reasonable basis to entire output. You have to distribute to the you have to distribute on reasonable basis to the entire output. Nana. Here, what we will do is simply divide by number of units produced. Am I clear? Next, Nana, abnormal reasons.
Loss due to abnormal reasons. The number of defective units are substantially exceeds the normal limits. The cost of rectification or loss are written off to the costing P&L.
When it is abnormal, it will be charged to costing P&L account. My question is that when a loss will be called as normal loss, when a loss will be called as abnormal loss. If actual loss is more than the expected loss, it is called as. If actual loss is more than the industry standard, it is called as. In process costing itself, we have learned on a normal loss means loss as per industry standard. If your actual loss is less than normal loss, if your actual loss is less than normal loss, that means there is no abnormal thing, Nana. But if your actual loss is more than normal loss, abnormal loss, Nana. If your actual loss is less than normal loss, you will get abnormal gain. Okay, we have seen this in process costing. The same thing is applicable here also. Let us go through CRD1, then you will get a clarity. Read it, Nana.
Adharva Pharmacare Limited produced an uniform type of product and has a manufacturing capacity of 3000 units per week of 48 hours.
Do remember one thing, Nana. In examination, he will not mention from which chapter the problem is taken. So then what you have to do, basing on the information given in the question, you have to decide whether he's talking about batch or uniform or joint products, byproducts. Generally, when it comes to joint products, byproducts, you can clearly see because joint product and byproduct information will be given. When it comes to batch, he will clearly express the term batch. But when it comes to unit costing, he will not mention anything. The thing that we need to focus is uniform type of product. He will not mention which method of costing is to be applied, Nana. So when it comes to unit costing, we know unit costing is applicable when industry produces identical products or uniform products. So when this term is used, we should be able to understand that we have to apply, or this problem is from unit costing. So what is the manufacturing capacity, Nana? 3000 units per week of 48 hours. So in a week, how many hours, Nana? 48 hours, and capacity is 3000 units. Next, Nana.
From the records of the company, the following data are available relating to output and cost of 3 consecutive weeks.
So capacity for the week is given both in terms of units as well as in terms of hours, Nana. What is the 100% capacity for a week in terms of units? In terms of hours? 48 hours, Nana. Now 3 weeks information is given. Week 1, week 2, week 3. Okay. Just by looking at unit manufactured, we can conclude that the plant is fully utilized or underutilized. Underutilized. Okay, week 1, week 2, week 3, units manufactured 1200, 1600 and 1800. Direct material, direct wages, factory overhead is given, Nana. Whenever the term direct material, direct wages, we know one thing, up to prime cost, all costs are or actual cost. All costs are up to prime cost, all costs are variable cost, all costs are actual cost. Here the term actual cost is not relevant at all, okay? We focus on variable portion. So when we say that up to prime cost, all costs are variable cost, that means per unit will remain the same. If you want, we can check, Nana. If you want, we can check. In week 1, what is material cost per unit? How to calculate material cost per unit? 9,000 divided by 1,200. How much you got? 7.5. Same should be there for week 2 and week 3 also. Please check, Nana. It is 7.5. Here also 7.5. Here, Nana, it should be 3. Okay. Now, when it comes to factory overhead, it is not that simple. First of all, I can conclude one thing. Total factory overhead keep on changing. That means it is not fixed. It is not fixed. What about per unit? If it is constant, Nana, then I can say that it is variable. But I expect that it is not at all constant. Now you have to show this working. You have to show this working also. You have to show this working. In the earlier chapters, we are straight away gone for semi-variable calculation. But here, in this, Nana, the only important part is the classification of cost on the basis of element-wise. Okay, this part is important. So we have to show this calculation. We have to give the conclusions also, Nana. Okay, right. After that one, what we will do? Okay, so here it is semi-variable cost. So when it is semi-variable cost, we know how to segregate variable portion, variable factory overhead from total factory overhead. Variable factory overhead per unit equal to change in total factory overhead divided by change in quantity or activity. 3 weeks information is given. You can take any 2 weeks. Then after you will calculate total fixed factory overhead. Total fixed factory overhead equal to total factory overhead minus total variable factory overhead. Then you will get fixed factory overhead. Whatever the fixed factory overhead you will get, it will remain constant up to 3,000 units. Why 3,000 units, sir? Because 100% capacity is equal to... Right, Nana? Read this sentence, Nana.
Assuming that the company charges a profit of 20% on selling price. Find out the selling price per unit when the weekly output is 2,000 units.
Find out the selling price per unit when the weekly output is... So we have to simply prepare cost sheet for 2,000 units. That's what, Nana. You have to prepare cost sheet for 2,000 units. We have to show calculation part very clearly. Let's start the problem. Start the problem, Nana. Unit and batch costing. Unit and batch costing. CRD1. CRD1, Nana. Okay. Let us working notes. Working notes. One. Both direct material cost and direct labor cost are variable cost as cost per unit remains same. Cost per unit remains same for all the 3 weeks. To be on safer side, I will be showing the working also, Nana. So just I will be bringing a small table here. See, this calculation part will be based on the weightage of the problem. The problem is given for 5 marks or 4 marks. I will straight away go to the semi-variable cost calculation, Nana. But the same problem is given for 8 marks or more than 7 marks, 8 marks or more than that, Nana. It is better to show the entire working notes. If it is given for 4 marks, I will straight away go to semi-variable cost calculation and I will prepare cost sheet. But if it's given for 7 marks or 8 marks or so and so, because in new pattern, we don't know whether it will be given for 4 marks or 6 marks or 7 marks, okay? So if problem is given for more number of mouse, to be on safer side, we will show the entire working note in the answer sheet. Am I clear? Understood? So basing on the weightage, you decide. But here I will be showing the entire thing. So what I will be doing here, what I will do is that I will prepare a table, Nana, to prove whatever the statement that I have given. First one will be week. Okay. Next, Nana, quantity. Next, direct material cost. Next, direct material cost per unit. Next, direct labor cost. Next, direct labor cost per unit. Only 3 weeks, right? 1, 2, 3. 1200, 1600, 1800, Nana. So, amounts, Nana, direct material cost amount 9,000, 12,000, 13,500. Okay, right. So, per unit, Nana, 7.5, right? So for 1, I will be writing 9,000 divided by 1200, you will be getting 7.5. Same for all the things, Nana, all the remaining weeks, 7.5, 7.5. What about direct labor, Nana? 3,600. Next 4,800, next 5,400. 3,600 divided by 1200, it will be 3. 3. And here also 3. So both direct material cost and direct labor costs are variable as cost per unit remains same for all the 3 weeks, Nana. Therefore, direct material cost per unit equal to 7.5 rupees. Direct labor cost per unit equal to 3 rupees. It will be the first working note. Second working note. Factory overhead is neither fixed nor variable as total keeps on changing and per unit also changes. Factory overhead is neither fixed nor variable. To prove that, I will prepare a column. Week factory overhead per unit. Are you able to follow, Nana? Right. So 1, 2, 3. Okay. Amounts, Nana, 31,000. Next 34,000. So totals are not same, Nana. What about per unit, Nana? 31,000 divided by quantity. How much, Nana? 1,200. I missed it. Okay, I missed the total quantity column. How much, Nana? How much you got? 25.83. What about this one? 33,000 divided by 1,600. How much you got? 20.625. Okay. No, this one 34,000 divided by 1,800. How much? 18.89, Nana. Okay. So therefore, factory overhead is a semi-variable cost. Working note 3. Calculation of variable factory overhead per unit and total fixed factory overhead. You people know how to do this calculation, Nana. Okay, you can take any 2 weeks. So variable factory overhead per unit equal to change in total factory overhead divided by change in quantity. You can take any 2 weeks, 1 and 2, 2 and 3, or 1 and 3. Able to follow, Nana? Yeah. Don't wait for me, Nana. Continue. Nana. Once you have completed that one, you can straight away prepare cost sheet, a statement showing profit for 2000 units. That is what they have asked, right? So whatever the requirement is there, Nana, keep it there as a heading and prepare a statement, cost sheet. So first one, okay, variable factory overhead per unit, change in total factory overhead divided by change in quantity. Let me take 1 and 2, Nana. 1 and 2 weeks. So variable factory overhead per unit, Nana, 33,000 minus 31,000 divided by 1600 minus 1200. So 2000 by 400. How much, Nana? 5 rupees, huh? 5 rupees per unit, Nana. So fixed factory overhead equal to total factory overhead minus total variable factory overhead. Let me take third week. Third week, Nana. Fixed factory overhead equal to, what is the total factory overhead on third week, Nana? 34,000 minus 1800 into 5. So how much you will get? Final amount. 25,000 the final amount, Nana. Okay, 25,000 is the fixed factory overhead. Okay. Now we need to prepare cost sheet for how many units? So for 2000 units, I will calculate factory overhead straight away here itself. Okay. So therefore, total factory overhead at 2000 units is equal to total variable plus total fixed factory overhead. So 2000 units into 5 plus 25,000. 10,000 plus 25,000, 35,000 rupees, Nana. 35,000 rupees. Right, Nana. So we need to calculate selling price or profit. What you have asked to calculate, Nana? Find out the selling price. Huh? So statement showing selling price per unit when the weekly output is 2000 units. And has everyone completed up to this point? If you have missed any content and if you want me to scroll, please let me know. Can I continue, Nana? Okay, na? Right. So heading will be statement. Statement showing selling price at 2000 units. Huh? At 2000 units, Nana. Selling price at to the particulars per unit total. Particulars per unit total. Total, Nana. First one, direct material. Direct material cost, Nana. How many units, Ra? Per unit, how much, Nana? 7.5, right? 2000 into 7.5. How much, Ra? 15,000. Direct wages, 3 rupees, right? So 2000 into 3, 6,000. Huh? There are no direct expenses, right? So if I add these two, I will get prime cost. Per unit, Nana, 10.5. Total will be 21,000. Okay, next factory overhead. Factory overhead. Already have calculated how much now? 35,000, right? 35,000. Okay, so 35,000 divided by 2,000. How much, Nana? 17.5. Are you able to follow, Ra? Or else you can do one thing, you can show variable and fixed separately. Anyway, I have calculated total, right? That's why I have shown total straight away. Now, if I add these two, I will get factory cost, right? Factory cost, which will be equal to total cost, Nana. Why? Because there is no any other expense mentioned in the problem. So how much it will be, Nana? 27, 28, 28. And this one, Nana? 56,000, Nana. How much is the profit that is given in the question? 20% on selling price, 20 by 80 on cost. So plus profit is equal to profit at the rate of 20% on sales. That is 20 by 80 on cost into 28, right? 20 by 80 on cost, Nana. 20 by 80 on cost. So 56,000. You can do in any of the way, Nana. 20 by 80 and 28 also is correct. How much, Ra? 20 by 20, 20 by 80 and 28. How much, Nana? 7 rupees, correct, na? 7 rupees. This one, Nana? 14,000. 14,000, Ra. Okay. So now selling price. Per unit, how much, Nana? 35. And this one, Ra? 70,000. 70,000. Very rarely he has asked a question. If you refer to the weightage now, you can clearly see. But this time you have MCQs, right? So definitely you shall expect some questions from such unimportant chapters. Unit costing, batch costing, these are unimportant. Nana. Very rarely he has asked some questions. But this time we have MCQs. So definitely you will get some MCQs from these chapters, either theoretical or practical, because he needs to balance it out. Okay, this is CRT1. Those who have completed CRT1, please go through conceptual questions. I think you can easily answer them, Nana. If it is arithmetic, you can do, you leave it, Nana. You can do it later on, okay? If the theory part is given, then we will see. Arithmetic, okay. They have asked about profit calculation, that you know, right? Easily. Please go through CRD2. CRD2. Same kind of problem is done in cost sheet, if I'm not wrong. If you remember, first 3 months, next 3 months, for the first 3 months up to 50% capacity, second 3 months, 80, second 9 months, 80% capacity. The entire year is divided into 2 parts, 3 months and 9 months. In the first 3 months, 50% capacity, remaining 9 months, 80% capacity. Up to 50% capacity, you will incur this much cost. Beyond 50% capacity, for every 25%, you will incur so and so cost. We have done that problem, Nana. If I'm not wrong, such kind of problem was there in cost sheet. You people go through CRD2, you will be able to recollect that problem given in cost sheet. Same problem here also. And here also same thing, Nana. Calculation of semi-variable cost. Okay. So let me start CRD2. This is the point that I was talking about.
Wonder Limited has a capacity of 1,20,000 units per annum as its optimum capacity.
Capacity is given, Nana. How much, Nana? 1,20,000 units per annum. Next, Nana.
The production cost are as under.
Okay.
Direct material 90 per unit.
Since it is variable, Nana, it is always given per unit, Nana. Next,
Direct labor 60 per unit.
okay.
Overheads fixed 30 lakhs per annum. Variable 1000 per unit.
100 per unit. Next, Nana.
Semi-variable 20 lakhs per annum up to 50% capacity and an extra amount of 4 lakhs for every 25% increase in the capacity or part thereof.
25% or part of 25%, Nana. You will be incurring 4 lakhs extra. If I'm not wrong, I have explained, Nana. If I change the position of this part and keep it here, see, in the material, let me make it clear. Nana. In the material, what they have given, semi-variable 20 lakhs per annum up to 50% capacity. There should be no doubt up to that point, Nana. And an extra amount of 4 lakhs for every 25% increase in capacity or part thereof. For every 25% increase or part of 25%. That means, see, for example, if the capacity is 60%, it can be done as 50 plus 10, right? For this 50%, Nana, I will be incurring 20 lakhs. And for this 10% also, I will be incurring, whether it's 25% or part of 25%, Nana, you will be incurring extra 4 lakhs. Am I clear? Understood, Nana? Now, if I change the position of this part, Nana, and I place it here, then entire thing will change. That means what? And an extra amount of 4 lakhs or part thereof. 4 lakhs or part thereof for every 25% increase in capacity. So that is 25% only, we will charge 4 lakhs. If it's 20%, then we'll apply it on pro rata basis. For 25% it is 4 lakhs, then for 20%, how much, Nana? Okay, same kind of problem is there in cost sheet also. If not in CRD, it will be there in assignment problems, Nana. As far as I remember, I have explained that kind of problem also. Right? Next, Nana.
The production is made to order and not for stocks.
That means what? Very good. No closing stock. The company is not interested in maintaining any stock, Nana. If you place an order, we will produce and we will supply to you. That's it. So production is based on orders, and they have no interest in maintaining stocks. The production is made to order, not for stocks. Instead of giving as there is no closing stock, they have mentioned in this way. Am I clear? Next, Nana.
If the production program of the factory is as indicated below and the management desires a profit of 20 lakhs for the year, determine the average selling price at which each unit should be quoted.
We need to find out the selling price, Nana. Very simple. Find out cost for 3 months, find out cost for 9 months. You will get total cost, Nana. To that you add profit, you will get total sales divided by number of units produced. You will get selling price per unit. So how to determine number of units, sir? For the first 3 months capacity is given. For the remaining 9 months also capacity is given, Nana. For the first 3 months, how much capacity? What is the annual capacity? 1,20,000 into 3 by 12 into 50%. How much you got? 15,000, Nana. And what about the remaining 9 months, Nana? 1,20,000 into 9 by 12 into 80%. 72,000, Nana. Once you get it sales value, you will divide it this by how much I will get? 87, Nana. Sorry, 87,000. If you divide the sales value with 87,000, you will get selling price. Simple, problem is completed. Ignore administration, selling and distribution. Anyway, that information is not given, right? So no need to worry about it, Nana. This question is there in the problem, okay? In our essay material. Right, let us start the problem, Nana. Let us start the problem. So how, sir, we'll prepare in a single statement, Nana. Particulars, 3 months, 9 months total. Particulars, 3 months, 9 months total. Is solution given below, Nana? No, right? Let us start the problem, bro. Calculation of selling price per unit. CRD2. CRD2. Calculation of selling price per unit. When it comes to 3 months and 9 months, Nana, give sufficient amount of width. For particulars, no need to show huge amount of width, Nana. Okay, that is particulars 3 months and 9 months. Particulars 3, 9 months total. First 3 months. Next 9 months. Total 12 months. Particulars. Okay. Capacity. Capacity, Nana. Straight away calculation part. 1,20,000 into 3 by 12 into 50%. How much we got? 15,000, right? Okay, and this side, Nana, 1,20,000 into 9 by 12 into 80%. How much, Nana? 50? 72, 72,000. Total will be 87,000. 87,000. Okay, right. Next. Total cost. Total cost, Nana. First one will be direct material cost at the rate of 90 rupees, Nana. Per unit, 90 rupees per unit, Nana. So 15,000 into 90. Amma? 13. 13 lakh 50,000. Next, Nana. 64 lakh 80. 80,000. Total 78 lakhs 30,000. Okay. Next, direct employee cost or direct labor cost at the rate of direct labor cost at the rate of 60 rupees per unit. How much, Nana? 9 lakhs. Next, 43 lakh 20,000. Next, 20,000. 2 lakh 20,000, Nana. Okay, if I add these two, you will get prime cost. You can, if you want, you can add, or you can straight away show overheads. Okay, right, Nana. Next, overheads. Add overheads, Nana. We have variable portion as well as fixed portion. Variable, how much, Nana? Variable at the rate of 100 per unit. Variable, fixed and semi-variable. Variable 100 rupees per unit. So it will be how much, Nana? 15 lakhs. 15 lakhs. And this one, Nana? 72 lakhs. So total 87 lakhs. Fixed, Nana. Fixed in the ratio of 3:9, right? 3:9. Why? Because total fixed overhead, how much? 30 lakhs per annum is given. So it should be split into 3 months and 9 months. So 30 lakhs into 3 by 12. How much, Nana? 7 lakh 50,000. And this one, 22 lakhs 50,000. 22 lakhs 50,000. Semi-variable. Semi-variable, Nana. So do the calculation, Badra. Up to 50% capacity, how much, Nana? 20 lakhs per annum, Nana. 20 lakhs per annum. For 3 months, how much? 20 lakhs into 3 by 12. 5 lakhs, Nana. Semi-variable. Once the problem is completed, Nana, just let me know. I will show the working notes below, okay? It may not be possible to show the entire working notes here. So for the first 3 months, it is 50% capacity, right? 50% capacity means 2 lakhs. 20 lakhs, huh? 20 lakhs into 3 by 12. How much, Nana? 5 lakhs. And this side, Nana, 80% capacity. 80% capacity can be divided into 3. 50 plus 25 plus 5, Nana. Whether it is 5, 10, 25, Nana, you will be charging. So basically what it will be, Nana, 20 lakhs. Very good. Plus 4 lakhs. Plus 4 lakhs into 9 by 12. How much you will get? 21 lakhs, Nana. So it will be 21 lakhs. Understood, Ra? So 26 lakhs. Okay. I think we have taken all the cost into consideration, right? Okay. Right. Total cost. Total cost, Nana. I will be writing here itself. 3 months ante 50% capacity. 9 months 80%, right? It is 50 plus 25 plus 5%. Okay, Nana. Total cost. For 3 months, how much on total cost? 50 lakhs. For 9 months, 2 crores, 23 lakhs, 50,000. So 2 crores, 73 lakhs, 50,000. Amma? 2 crores, 73 lakhs, 50,000. Okay, that is your total cost. From there on, you can do it easily, Anna, because profit is already given in the question. How much, Ra? 20 lakhs is the profit. So 2 crore 93 lakhs 50,000 will be your sales value. Divide by number of units, Nana. 87,000. Then you will get selling price per unit. What will be your selling price per unit, Nana? Total profit 20 lakhs, Nana. Total sales 2 crore 93 lakh 50,000. Units 87,000. Selling price per unit 3 that 3 356, 36. This is A, this is B, this one will be A by B. Note semi variable overhead 3 months 9 months. Okay, 50% capacity, 80% capacity. 80% means nothing but 50 plus 25 plus 5 nano. So overhead per annum, it will be 20 lakhs, huh? Amma? And this one will be 20 lakhs plus 4 lakhs plus 4 lakhs nano. Okay. So that will be how much, Ra? 28 lakhs. 28 lakhs overhead for the period. 20 lakhs into 3 by 12. On this side, Nana, 28 lakhs into 9 by 12. So it will be 5 lakhs. And for 9 months, how much, Nana? 21 lakhs, huh? So with this, we have completed unit costing. Please go to the concept question that are given there, Nana, and see whether you are able to answer it or not. What is the first concept question that is given there? Mathematical, Nana. Instead of 80%, 60%. Then what will be your overhead per annum for the 9 months, Nana? 24 lakhs, Nana. Overhead for the period 24 lakhs into 9 by 12. Okay, that is the first concept question. What is the second concept question? Treatment of sale of scrap of raw material. What we will do? Subtract it from direct material cost. Same the way we have done it in cost sheet now. Okay, right. There are some assignment problems related to it, Nana. Please go through the assignment problems, Ra. Please go through the assignment problems. The solution is also given to you in the end of the material. Make it fast, Nana. We have completed unit costing. I want you people to go through assignment problems. And solution is also given there. You can do that easily. Make it fast. After that, I will start batch costing. Make it fast, Nana. Don't waste the time, Ra. Just go to the assignment problem. Solution is also available to you. If you're able to understand the question, skip to the next problem. If I completed that one, Nana, I will start the next chapter, batch costing. Problems are very, very easy. Provide if you know, if you have any, if you are able to remember EOQ. EOQ stands for economic order quantity. There are basically two methods for which we, with the help of which we'll do the problems, right? We have three methods, Nana. One is trial and error, second one is formula, third one will be graphical method. But when it comes to problems, we'll be using the two, trial error and economic. Predominantly, we'll be using the formula method. What is the formula for economic order quantity? Root of 2 into A into O by C, right? A stands for Consumption or demand? Demand of? Since we're talking about raw material, purchase quantity of raw material, we will be focusing on raw material now. Annual demand of raw material or annual purchase of raw material. Both mean one and the same. Because EOQ means we're not concerned about consumption, we're concerned about how much quantity to purchase. How much quantity to purchase. So we focus on purchases or demand of raw material. O stands for ordering cost per unit or per order? Ordering cost per order. C stands for per unit per annum. Carrying cost per unit per annum. So root of 2 into, that is from raw material point of view. Batch costing is from output point of view. Okay. At the time of purchase of raw material, we understood that we can't purchase entire raw material at a time. To minimize our cost, to minimize our annual cost or additional cost, we need to purchase raw material in lots. So in whichever lot of raw material the additional cost is minimum, that lot will be called as economic order quantity. What is additional cost, Nana? Summation of ordering cost plus summation of O and C. Isn't it? Now here, that is for raw material, Nana. Now when it comes to production also, yes, in a year, the annual demand for the output is 80,000 units. The annual demand of the output is how much? 80,000. It does not mean that you are going to produce the entire 80,000 in the first month itself. Even though you have the capacity, it does not mean that you have to produce the entire output in the first month itself. What will happen if you produce the entire output in the first month, Nana? Storage cost will increase drastically. That means your cost of production will increase. Just like we have additional cost when it comes to purchase of raw material, we have additional cost when it comes to production of output also. So what is the additional cost, sir? One is setup cost and the one is carrying cost. One is setup cost. What do you mean by setup cost, sir? Assembly cost. Setup can also be called as assembly. Before start of the production, we need to assemble the machine. We need to assemble the machine. Without assembly and de-assembly, we can't produce, Nana. Once the production is done, what the company will do, it will deassemble the machine. Why? To reduce wear and tear. And again, when they want to start the production run, they will assemble the machine. We can see this situation day-to-day activities also. The entire machine time can be divided into 3 types: setup time, running time, and maintenance time. Setup time can be productive or unproductive. When it is mentioned, then only you have to take it as productive, or else it is unproductive. Here also same thing. Here also, there we are talking about production. Here also we are talking about production. When you decide to produce anything, you have to assemble the machine. How many times I have to assemble the machine, sir? In how many batches you want to produce, that many times you have to assemble the machine. So first question is, why I need to produce in batches? Why we need to produce in batches? Why can't we produce one after the other? If you decide to produce one after the other, it is uneconomical. It will be uneconomical. That means what? You are switching on that bigger machine and you are producing only one unit. After that, you are again producing one unit. That means cost will be very high. Rather than producing one after the other, if you straight away produce 10 or 15 units at a time, Nana, your cost per unit will be very, very low. That is one basic reason. That is, it is uneconomical to produce one after the other. It is economical to produce a lot at a time. That is what they do in FMCG. They are not going to produce a biscuit after the other, Nana. They are going to produce a lot of biscuits together. Same in case of medicines also. They are not going to produce one tablet after the other. They are going to produce a lot of tablets. In fact, a lot of strips together. Why they are producing in that way? Because it is economical. Same thing is applied in companies also, manufacturing companies like car and bikes, Nana. Rather than producing one car after the other car, they will produce a lot of cars together. 10 cars, 20 cars, depending on the plant capacity. 10 cars, 20 cars together. In this way, they will be able to reduce the cost. Now, when they can produce in lots, when whatever the goods that they are producing have identical features. Same color, same dimensions, same size, same software, everything is same, and then becomes very easy to produce in lot. So when goods have certain features and when they are to be produced in lot, then we decide to produce in batches. So all those points are covered here, Nana. And the practical example and the practical application of batch costing is the reason for practical application of batch costing is in case of any problem in production, we can identify that easily. For example, Ola company. It suffered from problems, right? Initially, it suffered from certain problems. Now, Ola company produced those bikes in batches, Nana. So they were able to identify that whatever the problems that we have come across, all these bikes related to one particular batch. So they were able to identify that batch promptly and rectify that problems, Nana. Just imagine if Ola did not produce in batches and kept on producing continuously, it will be very difficult for Ola company to pinpoint the errors or problems in the bikes. So companies, what they do is that it becomes very easy for companies to monitor the production. That is the reason why they produce in batches. When they are supposed to produce same kind of products in large quantity, they prefer to produce in batches. Same kind of products, large quantity lo produce cheyalante batches kavali. Batches to produce better. For example, I need to manufacture 1 lakh bikes of same color, same dimension, same specification. Rather than producing 1 lakh bikes together, I will produce in batches, Nana. 1,000 bikes at a time. 1,000 bikes at a time in this way. So 1 lakh divided by 1,000, how many batches, Nana? 100 batches. 1 lakh, I need to produce 1 lakh bikes. In each batch, I have decided to produce only 1,000 bikes. So in how many batches I have to produce 1 lakh bikes, Nana? 100 batches. For each batch, I have to assemble and deassemble the machine. At the start of the batch, I have to assemble the machine. At the end of the batch, I have to deassemble the machine. Now, for this assembly and disassembly, definitely I will incur some cost, right? That is called as setup cost. That is called as setup cost. Now, just like ordering cost, setup cost has nothing to do with number of units produced. It depends on number of batches. Ordering cost depends on number of units or number of orders. In the same way, setup cost also depends on number of setups, number of batches. Am I clear, Nana? Now, just like carrying cost in case of raw material depends on number of orders or number of units. Here also carrying cost depends on number of units. Because carrying cost example is storage cost. Just like you store raw material, you have to store finished goods, right? So carrying cost depends on number of units produced here. That is the only thing that you need to remember here. Same formula, only the representation will change. Instead of using A, we will use D. Just for the sake of convenience, to avoid confusion. D means nothing but here annual demand of output. There we will be using O, here we will be using S. S stands for setup cost. Setup cost, Nana. And C stands for same. C, carrying cost per unit of raw material per annum. Here carrying cost per unit of output per annum. Now if you remember trial and error method, if you remember trial and error method, Nana, how you will calculate total ordering cost? Number of orders into ordering cost per. Am I clear, Nana? Now how you will calculate total setup cost here? Number of batches into or number of setups or number of batches into setup cost per batch. Am I clear? So all these points are almost similar, Nana. How you will get number of orders, Nana? A divided by order size. Here also A divided by batch size or D divided by batch size. How you will calculate total carrying cost, Nana? Number of units in a batch. Number of 1/2 into order size into carrying cost per unit per annum. Here also same thing. 1/2 into batch size into carrying cost per unit of output per annum. Okay. So all those things. Let us go theory part, Nana. Whatever the formulas are there, we will write it in the notes. Okay. Right. Read it, Nana. Read the theory part.
Batch. Where the output of the job consists of homogeneous units, a lot of similar units may be used as a cost unit for ascertaining cost.
Okay.
Such lot or collection of units is called as a batch.
See here, lot means nothing but batch, Nana. When we were supposed to produce same products in large quantity, instead of producing at a time, we'll produce it in batches. We'll produce them in batches, Nana. Why, sir? It becomes very easy for the manufacturer to have proper control over production. Okay, Nana. Next round.
Batch costing. It is a form of job costing
It is a form of job costing. Next round.
wherein the cost is ascertained for a collection or a lot of units called batch.
Okay. So
Separate
basically here cost will be determined for a batch, Nana. For example, in a batch there are 100 units. If you want to find out cost, you will get cost per 100 units. Now if you want to know cost per unit, Nana, total cost for 100 units divided by 100 units. Am I clear, Ra? So you will get cost for a batch, Nana. If you want to know cost per unit in that batch, total cost of the batch divided by number of units in that batch. Read it, Nana.
separate cost sheets are maintained for each batch of production.
For each batch, we will maintain a separate cost sheet. Separate cost sheet. Next, Nana.
Cost per unit equal to total cost for the batch divided by number of items produced in the batch.
Next, Nana.
Examples of industries where batch costing is applied.
Pharmaceutical, radio, TV, and computer. Circumstances under which batch costing may be adopted. That means in which situation batch costing will be used. It will not be applicable for all types of industry. Under certain circumstances only batch costing can be used. What are those circumstances? Read it, Nana, one by one.
When the output of a job consists of a number of units and it is not economical to ascertain cost of every unit of output independently.
When you need to produce large quantity, it is uneconomical. It will be uneconomical to produce one after the other. When you are supposed to produce in large quantity, you can't produce, it is uneconomical to produce one after the other. You have to produce number of units at a time. You have to produce number of units at a time. Then only you will be able to produce cost, it will be able to produce units at less cost. Next, Nana.
When certain physical characteristics like size, color, taste, quality, etc. are required uniformly over a collection of units, example garment.
When certain physical characteristics, size, color, taste, quality, etc. are required uniformly over collection of units. When I need to manufacture 100 red color cars, Nana, I will set the machine only once and I will try to produce 100 cars at a time. ప్రతి కార్కి మెషిన్ సెట్ చేయాలంటే ఏమవుతుంది? సెటప్ కాస్ట్ విల్ ఇంక్రీజ్. So this condition is also essential. Yes, I need to produce a large number of units and there is a uniformity in size, color and everything, Nana. So it becomes very easy to produce in lots. Next, Nana.
When an internal manufacturing order is made out for production of components or subparts, example component parts of radio sets, watches, etc.
Components, spare parts. Spare parts are also manufactured in batches. Spare parts example, nuts and bolts होने का था. So spare parts also produced in batches. Okay, so these are the situations during which we will use batch costing. We need to produce large number of units. There should be uniform characteristic, Nana. And in case of spare parts also we will use batch costing. Now what is economic batch quantity and how it is determined? Economic batch quantity. What do you mean by economic batch quantity? The quantity of output at which cost of production is low is called as economic batch quantity. What is economic order quantity? The quantity of raw material at which additional cost is minimum is called as economic order quantity. Here in terms of production, right? So the quantity of output at which cost of production is low is called as economic batch quantity. Read it, Nana.
Economic batch quantity represents the optimum size for batch production. The determination of a EBQ involves two types of cost.
Nana, economic batch quantity represents optimum size of batch production where cost of production is minimum. Where cost of production is minimum. Now when it comes to economic batch quantity, when it comes to economic batch quantity means cost of production is minimum. When we talk about cost of production, you can divide it two, Nana. One is setup cost and the one is carrying cost. Setup cost. Setup cost means nothing but assembly and de-assembly cost. Assembly and de-assembly cost. Nana. And carrying cost means nothing but storage cost. These are the two costs. Okay. Its summation of setup cost and carrying cost is called as cost of production. Now when it comes to setup cost, Nana, depends on number of batches or production runs. In ABC we came across this term, Nana, production run or setups. Okay, and this one depends on, నేను బల్స్ రాసుకుంటున్నారా రాయచ్చుగా నోట్స్ సాయి అండ్ నెక్స్ట్ పర్సన్ టైం అయిపోయిందన్నా నాకు తెలుసు కావాలని వదులుతా లేట్ వదులుతా చూడు అంతా నీ మూలంగా లేకపోతే రాయకుండా ఏంటరా ఆకలి వస్తుంది ఎప్పుడు లేదు చెప్పు తప్పంతా మీదే సార్ ఇంట్లో ఉన్నప్పుడు బాగా వాయించారు depends on number of units produced per batch. So batch size, number of batches, setup cost, carrying cost. As batch size increases, number of batches, Amma, decreases. How we will get number of batches, Nana? Annual demand of output divided by batch size. That is the formula. When number of batches decreases, Nana, number of setups will also, number of times assembly also decreases. Setup cost will decrease. And what about carrying cost? Increases. Okay. So basically we talk about the relationship between these three.